right, thanks guys for joining. It's going to be a conversation between Danya and I. We're going to have a few different topics regarding buying and selling a business that we're going to go over. I've got some questions for Danya. I'm kind of wanting to pick her brain from an attorney's perspective, some of the things I don't get to see always as a broker, and she had a couple questions for me. So it'd be kind of interesting to see what Danya has to say to a couple of my questions and what kind of questions she's got for me. I'm Jason Pittman. I'm a business broker with Exit Advisor. I've been a broker since 2005. I help folks sell their businesses or prepare for the sale. And I'm speaking today with Danya Shakfeh, who is the founder of Motiva Law. She's a business attorney. And one of the things we have in common is we're both working with folks that are buying and selling businesses, but we've got our different niches. And yeah, so let me turn it over to Danya to say hi, and kind of curious to see what her first question is.
Hi, Jason. Thank you for that. So as Jason mentioned, I am a business attorney. My office is based out in Oak Brook, and I have been focusing my practice lately on buying and selling businesses. I really enjoy working with business owners. I see a person's business as kind of like a manifestation of their life and goals and how it plays out in business. It's like an art form. I know it might sound cheesy to some people, but it's just, it's like how we want to be in this world often shows up in our business. And the best way to show up is if you're protected and you have the right professional guidance to make sure that you meet your dreams and goals. And so I am very much looking forward to this. And I do have a lot of questions. As an attorney, I always get the clients kind of after the initial talks and negotiations, but it's always nice to hear the perspective of a business broker who sees things going on prior to the people coming to the lawyers. And also, I think you guys also see the deals that don't pan out pretty early on and prior to even coming to the lawyers. And so I have some questions for you that to get your perspective on things that I don't see on the daily basis. My first question to you, Jason, as a business broker, how is value determined in a business? How do we know how much a business should be sold for?
Right. Yeah, there's definitely some rules of thumb that can vary from industry to industry, but for most smaller owner-operated companies, it's going to be determined by the earnings, the net profits of the business, and it's usually some kind of multiple of that. One of the things we'll do as brokers is go in and recast the financials and try to find the whatever the owner's benefits are, like their personal compensation, if they have personal vehicles, health insurance. Sometimes it could be things that are really not related to the business at all. They might be running through some expenses for like their vacation home. So what we're doing is we're looking for those things that are truly the personal expenses of a business and add those back in to come up with the earnings. And then from there, we can look at comparable sales. And most brokers are using kind of a direct market data method, we're calling it. It's just a fancy way of saying comparable sales. And from there, we can figure out what a range of value is. And then within that range of value, we'll look at some other things of the business that make it unique to kind of figure out, should we price it at a premium, the high end of the range here, the low end? So we might be looking at things like how unique is the business? Do they have something that's truly sets them apart from the competition? Do they have recurring revenue and contracts or subscription? There could be certain things that make the business more attractive, but it's all going to start with the earnings of the business. And most small businesses will sell for a multiple of that earnings.
Awesome. So that's interesting, Jason, that you mentioned the earnings. Like I see that a lot of business owners don't actually put a value on their own work as the business owner. Oftentimes the business owner don't really pay themselves. And so when you want to sell the business, and if you're not paying yourself as a business owner, that's not very attractive to the buyer because the buyer wants to pay themselves. So I think that's a really important point to raise. So the next question I have for you is about due diligence. I want to ask you about the major concerns that we have during the due diligence process, but can you just kind of like go over what due diligence is and its role in the business acquisition?
Right. Yeah, that's a good question. So after you make an offer on a business, whether it's an offer to purchase or a letter of intent, and both parties have agreed and signed, then the buyer is also putting forward basically a list of things. Here are the things that are important that we want to check off on. It might vary a little bit from buyer to buyer, but they're looking to verify the claims that have been made by the seller and or the broker, primarily financial accuracy. So they want to look at your P&Ls and balance sheets. They're probably going to want to have 3 years, sometimes more. They're also going to want to look at the tax returns and see if everything balances out. They might be wanting to look at your bank statements to see if everything balances, see if there's any tricks going on. In addition to that, they're going to be looking at your customers, find out if you have too much customer concentration. So if they find out that you have that one large customer that makes up 30% of your revenue, but in the initial talks, they were under a different impression. They're looking for things like that. They want to see what exactly are the assets included in the sale and IP, and what shape are they in? Are they useful? Are they new? Are they old? Does anything have to be replaced? I think those are a few of the big ones that's going on in due diligence. It's really about verifying the claims that have been made.
Right. I always tell my clients that you have to consider due diligence it's kind of like when you buy a home, right? You do the home inspection. You don't just say, "Oh, I like that house," and then buy it, right? And so I think it's really important to have a due diligence checklist, right? You probably, as you prepare your clients for exit, like you actually say, here's the list of things that they're going to ask you, prepare that now.
Mm-hmm.
So with that said, if you want the checklist, you can actually scan, I think I'm doing this right here, and so we
Got it.
can send you an email with that checklist so you can have that ready. So as you want to sell your business, or if you want to know like what to look for as a buyer, then you can see that checklist there. And it's a
Mm-hmm.
really helpful tool that you can have, like whether you're a buyer or a seller.
Yeah, even
Um,
if you don't plan on selling anytime soon, I think it's good to go through because it gives you an idea. What are the things I need to have ready eventually? And you don't want to be waiting until somebody actually signs a letter of intent, right? Because one of the things when you're buying or selling a business, if things drag out too long, you lose
yeah.
momentum. It's always a deal breaker if somebody just kind of is waiting more than a couple weeks for something that should have been ready. The nice thing about the list is even though you're not necessarily going through checking it off, you might be surprised by a couple things on there, and it gives you an opportunity to start planning for that in advance, sort of pre-diligence.
Yeah. I think it's a great list for every business to have because it's really, things that every business should have. Like you should have your contracts in place, you should have your business plan in place, you should have your marketing plan in place. And so I probably should go through I think on an annual basis to say, are these things still, kind of going along? And then, hey, if you want to sell, it's all ready to go. It should be pretty easy.
Yeah, well,
Um,
I'm kind of curious then from that point, to kind of turn it on you. When you are in that phase, is there anything in particular you find out during due diligence that sellers wish they would have gotten started on sooner? That kind of comes up with you?
I think the biggest thing I've seen is actually related to financials. Well, actually, no, a few things. So financials, especially when you're a smaller business, it's really easy for a business to run their personal expenses through their business, to not even have proper P&Ls, to not really take their taxes too seriously. So when they want to
Right.
turn those financials over to a buyer, it honestly just looks really sketchy and a buyer will get really turned off. I mean, like regardless of how much revenue like the actual business is pulling in, but really in the end, you're only getting a small amount to the owner. It's not really something that people want to buy. And then like another issue I see too is corporate documents. A lot of people come and say, oh, I don't have a business partner. And then I pull up their corporate documents and, oh, their spouse is on there or their sister. Oh, it's just on paper. I'm like, it doesn't work that way. They're either a business owner or they're not. You can't say, oh, it's on paper, but not in real life, because that creates huge liabilities. Or sometimes not having corporate documents at all. And sometimes it's not even clear who actually even owns the business just because of the way the business is run. It's like, wait, are you guys business partners or are you an employee? Is the money that you put in, is that an investment or is that a loan? I mean, it makes a huge difference and it causes a lot of confusion for potential buyers. I think those are the two biggest issues that I see.
So you had mentioned the documents. What are some of the important documents that you think every business needs to have ready? That almost applies to most businesses.
So I would start to say is that the documents in your business should kind of tell a story about your business. You want people to come in and say, okay, I know what the business does. I know how they spend their money. Where's the money coming from? And so in order to know how the business is running, you need to have your contracts in place. So yes, it's good to have contracts from a legal perspective, but the contracts can also tell the story about the operations of your business and how it's making money and how it's spending money. And then also like the corporate documents, and you want to know who actually owns the company and the people's roles in the company. And anything also related to potential lawsuits. I know people like to have this idea of where, oh, well, if we just trash everything and there's no paper trail, but that can actually really backfire because sometimes you might actually need those documents to protect yourself and also so that someone is not blindsided. Also, any documents related to compliance, any certificates or licenses, you want to make sure that those are easy to find because someone wants to buy your business. They want to make sure that your business is compliant so that they don't take over that liability, especially in an asset sale, which we'll talk about. Also to documenting debts. So something to keep in mind is that banks keep a lot of the documents for only 7 years, maybe 10 if you're lucky. So, and then that might sound like, oh, I don't like, why would I need a document from 12 years ago? But it can come up. So I'm not saying you have to keep every single statement, but you certainly like want to keep track of just like the general, I think debts and liabilities and what people owe you as well, accounts receivables. And
Right.
lastly, any assets and also the inventory. So there's a lot of software out there that can help you with that, but you really need to know your inventory, especially if the business that you have is based on inventory. So those are the biggest things that I would say. Obviously,
Yeah,
in
that's
the due
a
diligence checklist, it has everything that you need, but those I would say are the basics.
yeah, that's a good point. With inventory can be a big issue, especially if you have a lot of aging inventory. Sometimes it's better just to get rid of that before
Yeah.
you go to sell. And the kind of making sure you have a bad debt policy that you can show somebody. So if you have receivables and a certain percentage of that is just not going to get collected on, you want to be able to show what your policy is for dealing with that and making sure your P&L and balance sheet reflect that.
Jason, what can you tell me a little bit about the owner's role in the business? I know we talked about that a little bit earlier, but can you give me thoughts about that?
Yeah, I would say that that might be the number one thing that a buyer is looking for when they first contact me. Besides, how much money is this business making? They want to know what the owner's day-to-day role is. They want to know how they spend their time, because a lot of times the buyer of a business, they might be leaving one profession, they might be leaving a job. This might be the first time running a business of their own. They want to make sure they can do what the owner does, and or it might be the kind of thing where they want to make sure they've got staff in place to absorb the owner's role. So if the owner's working 40 50 hours a week, it'd be good to have that broken out, and show people this is kind of how I spend my average week: 10 hours doing this, 5 hours doing this. And in the process of doing that, you might surprise yourself and find some things that, I should really delegate this to somebody so I can free up more time. But going through showing what the day-to-day role in the business is. So are you the main salesperson? One of the things I talk about is the rainmaker. So if you're doing 75% or more of the business's revenue, that could be an issue because now the buyer realizes they got to be the salesperson for the business. They're going to be concerned about relationships between the seller and customers or suppliers, because one of their biggest concerns is the moment they take over, um, a customer's going to leave, an employee's going to leave, or a supplier is going to leave because of the seller's relationship. So think about, are you the main salesperson? Are you the main delivery? Are you better at everybody else in making the product? If you have a machine shop and you're the best machine operator or programmer in the place, we want to have all that mapped out because the buyers are really going to be looking, okay, what are the things I can do and what are the skill gaps I'm going to need to fill? And so showing what kind of SOPs and procedures you have in place, employees that are in key positions. These will all be good signs that a buyer's looking for to know that the owner is not the business themselves. They want to see that there's some systems around the owner. And then it'd be a greater sign that the continuity of the business will continue.
That's so interesting. It's usually the first thing people want to ask is how much does something cost in terms of money, but it seems like time is actually a bigger factor here. Because I
Yeah,
always say that money comes and goes, but the time is really the asset for a business owner more than anything. So
right.
that's interesting perspective that you brought up. I wish that was more clear on those listings. It's always like how much it costs, and there's
Yeah,
there's something
they're
that's
always,
certainly something to talk about.
yeah, it's usually focused on the financials at first. And yeah, I think once you get past that, it's really about, okay, what's the owner doing behind the scenes? And is the business just going to crumble the moment they leave?
Right, right. I was thinking too, just kind of before we wrap up and start taking questions, it looks like we have a couple coming in, is to talk about the
Hmm.
difference between an asset sale and a stock sale. So do people at your kind of phase of the deal, are they already talking about like if they want to structure the deal as an asset sale or a stock sale, or is it just when, people like me, like lawyers come in?
Yeah, it might come up. I usually will explain that to them because usually it'll come up in this way where they want to know, are there receivables? Are they going to stay with the seller? Are there loans? Is that going to stay with the seller? And that's when I'll explain, well, most of the time this is going to be an asset sale. Think about it kind of like if you're buying a house. If you buy a house, you're not going to take over the seller's mortgage, right? The seller is going to take the money at closing, pay off any debts, and then whatever's left over, they're going to keep. Sometimes in a asset sale, or usually in an asset sale, it's the kind of thing where the assets are going to stay. I mean, the receivables are going to stay with the seller. So that's about the limitation of how
Mhm.
we'll talk about it from the brokers, but it's also one of those things where I say, look, you want to talk to a transaction attorney and make sure you structure this right, because there are advantages to doing it as an asset sale and a stock sale for both the buyer and the seller. Sometimes it makes sense to do it one way or the other, but that's where I would turn them over to you to say, okay, Danya's really going to help you figure out which way you want to do this. But what are your thoughts? Because this is something that you see more than me for sure.
Yeah, so it's interesting for the people who don't have brokers, and for smaller businesses, they usually come to an attorney often after the letter of intent has been signed. And for those who don't know, like that's a document. It's like the formal but non-binding offer. So
Mhm.
sometimes they have already decided on their own if it's going to be an asset or a stock sale, and then I have to come in and say, well, maybe we shouldn't do it that way. So the asset sale, kind of like as the name implies, is that you're only buying the assets, and the assets could include intellectual property too, or the name. And then the stock sale, like you're actually buying the corporation. And so sometimes I have to backpedal and and tell them, hey, like we kind of have to redo this part. Sometimes they don't even contemplate that. It's just like, yeah, we're buying the business, and they don't really know exactly what they're buying. So I kind of have to go in, try to redo some of those steps. But for smaller transactions, like more like what we call like Main Street, transactions, it's usually like the asset sale, just because it's smaller, it's faster. And then typically buyers do want to buy only the assets because they don't want to buy the history of the company because of the potential liabilities.
Exactly.
Also, there's like tax write-offs the buyer can take advantage of if they buy the assets alone. But for businesses where the business model has more of like a relationship based business, or if you have certain contacts that can't be transferred to a new corporation or a new person, then I tell my buyers that, okay, they should probably do a stock sale so that they can actually maintain the value of the business, because it's
Hmm.
really about the relationships. It's kind of similar what you were talking about before, is if that, like, if certain people leave the business, is that going to cause the business to, like, to falter because the key people leave? And so if you want to keep kind of the actual contracts or relationships, then you want to do a stock sale. But I think for most smaller transactions, the asset sale is what I've seen most. But again, it's just case by case. It also depends on
Hmm.
the goals of each of the
Right.
parties, how quickly the seller wants to get out. If they want to get out more quickly, they're more likely to agree to the asset sale. But that's basically the difference. And again, it's going to be in the guides that if you scan, then you also get a copy of that. So you have the copy, I break down the difference between the asset sale and the stock sale. Yeah, so those are the only comments I have. Jason, is there anything you want to add? Otherwise, we have a question here from Neil.
I was going to say one of the ones I've seen that's kind of an exception to the asset sale are bars in the city of Chicago. It's so hard to get a new liquor license that most of the time it makes sense to buy the stock of an existing company, so the liquor license will transfer to the new owners. But those are usually the only kind of Main Street type deals I've seen where it's a stock sale.
Yeah,
Maybe there's some kind of unique license that needs to transfer.
yeah.
And it just makes sense to keep it in the existing corporation. But
Yeah, I see that too in the healthcare industry. It's kind of similar, and anything related to too much of the financials, if you want to keep the EIN number.
oh
Yeah,
yeah.
so those are some of the things, like if there's some credentialing involved, stock sales are also good for that. So yeah, like I said, you never want to assume. It just really comes down to the individual business and the business model and the goals. But that's basically it. But it's definitely a discussion to be had with the experts. And I would say to talk both to your attorney and accountants to make sure that that's covered, so that you don't end up buying the wrong thing and then you've just wasted your time and money.
Right. Yeah, so one of the questions I saw here in the chat, when a deal falls through or goes cold, are there strategies to revive it without just dropping the price? Yeah, that's a good question. So the deal falls through. It's probably not necessarily going to be a price. It might be because the buyer has a harder time getting financing than they thought they would, or once they're in due diligence, they just find things that makes the deal less attractive. I'd say the strategy for something like that is making sure that everyone is clearly communicating. You really understand what the concern or issue is, because sometimes somebody might be confused on something, and it could be just a simple miscommunication. But I think once a deal has fallen through, yeah, it's pretty hard to revive that. But if you've had people, in terms of like dropping the price, if you've had people look at it and then pass for whatever reason, that's a good way to re-engage people that have already expressed interest in buying the business, is just dropping the price. But those are kind of my thoughts.
Yeah, I think once the deal comes to me, obviously the deal isn't going cold. But one thing that I've seen is that when people come to the lawyers a little bit too late and there's already a timeline set, and then the lawyers need time to actually do their job, the parties might get upset and say, no, we had a closing date for this, and then the lawyer's like, well, I actually need time to do due diligence, because sometimes they skip it. Or it takes time to draft these contracts. It's not, literally I've had people reach out to me on a Wednesday and say, we have a closing on Friday. And I'm like, I don't really, that's just not possible.
Wow.
I can't do that for you. And so if they want to engage the lawyers really late, then it may cause a delay. And I've seen the deal sour from that. So I think clear communication up front and just having all the ducks in a row in terms of the advisors, even if you don't want to hire the lawyers, the accountants early on, at least keep in mind that they need time to do the things that they're supposed to do.
Right.
So
I can't imagine 2 days. You wouldn't even be
it's
able to get to it within 2 days. You're
I
already booked up, I'd imagine.
yeah,
Um,
I can't even take them. I'm like, sorry, I just can't help you. So I don't know what happens to that.
well,
So
I'll pose this other question here because it has to do with legal considerations. Are there any legal considerations specifically for the protection of your employees?
that's a good question. So this comes a lot because a lot of often the sellers want to make sure that the employees stay for the sake of the employee. Like the employer does not want to feel like they are abandoning the employees. Unfortunately, really, there isn't too much you could do unless there's a contract between the employer and the company. And so if in a stock sale, that's really where it counts. If the contract calls for like a time for the employer to be employed, then that would stay. In an asset sale, not really. There isn't much you could do unless you actually put terms in the purchase agreement to keep certain
Right.
employees, but most employees are at will. It's rare to have like your everyday employee to have a contract with an actual term. I will say that the buyer often does want to keep a lot of the employees anyway,
Mhm.
especially if the business owner is leaving. So that's a good conversation to have early on. So the seller wouldn't necessarily be using the legal approach to keeping those employees, but try to sell to the buyer why the buyer should keep those employees from a business or practical perspective.
That's good. One thing I could add in there is in some businesses where there's key employees, when we're negotiating the deal, we might negotiate something that could be considered protection, where there's an employment agreement, because sometimes employees are going to be worried, all right, am I going to be fired? So it might be a good thing to have that during the negotiations before anything is signed, that, okay, we'll agree to have a new employment agreement with these employees. There might even be a stay-on bonus. So as you're negotiating the deal, you could even negotiate a bonus for your employees as a thank you for sticking around for a certain amount of period. Those are a couple things.
Yeah.
Good questions. Thank you, Neil. I would say, in kind of to wrap things up, if you'd like to see one of these checklists and a guide on acquisitions that Danya has put together, both of these can be received. You can scan on the barcode, and that'll take you to where you can get those, and hope you find some value out of those. But any parting thoughts from you, Danya?
No, it looks like we just got one more question here from
Oh,
Tyson.
sure.
Any recommendations on how to find a marketplace for mergers and acquisitions? I think maybe that's a question for you, Jason.
Yeah, marketplace. One of the if I'm understanding the question correctly, if you want to find opportunities for businesses for sale, one of the big ones is bizbuysell.com. So biz and then buysell.com. That's probably the biggest one. A lot of brokers go there, so you'll find me on that website in the broker directory, and then all the businesses I'm working on, I post there. So that's a great way to find opportunities if you're a buyer, and if you're a seller thinking about selling and you want to interview a few different brokers. It's a great resource. Another one would be ibba.org. That's the International Business Brokers Association. That's a great way to find some brokers as well as some of the deals they're working on. So those would be my two recommendations. There are some others, but I think those two are pretty useful.
Yeah, and also to add is that a lot of my clients, when they are about to buy a business and that deal falls through, I always put them in touch with a business broker. So, perhaps if you speak to a broker directly, then you might get some insight on some businesses that might be coming onto the market soon prior to them
Right.
coming up on those sites. So it's just good to know someone. So, like a good attorney like myself will have connections with business brokers like Jason. And so you could always just reach out to us and just ask us, hey, do you know anyone who could help in addition to going to those websites?
Yeah.
Yeah, so these are great questions. Thank you, everyone.
Well, this has been fun, Danya. We ought to do this again soon.
Yes, we will.
Hope everybody got something out of it, and enjoy your day.
Yes, thank you. All right. Okay, thank you, everyone, and thank you, Jason.
My pleasure.